Thank you for joining the United Capital Infrastructure Fund webinar. My name is Chikodi Obiji, and I work with the Capital Market and Advisory team at United Capital PLC. I'll be moderating this session for today. The topic of discussion is investment opportunities in infrastructure sectors and how these opportunities can be accessed via the investment in the United Capital Infrastructure Fund Series 2 offer. This section is going to be split into four sections. The first section is going to be presented by Mr. Uchenna Ukparo, who is the Chief Investment Officer and Fund Manager for the Infrastructure Fund, UCIF. He will be speaking through the transaction summary, the target investment, and the Series 1 performance. The second section will be presented by Mr. Mobolaji Simoni. He is the Structured Finance Manager for UCIF, and he will be addressing the key investment considerations. After which we would move on to the question and answer section that will be coordinated by representatives of the financial advisors to the fund. These representatives are Feintola Adesoyin, who leads the capital market and advisory team at United Capital PLC, and Mr. Abimbola Kazim, who heads the equity solutions at FCMB Capital Limited. Lastly, the last section would be a closing remark from the Chief Investment Officer, Mr. Uchenna Ukparo. Before we start the presentation, just want to notify everyone that there's a Q&A tab that you can access. You're able to send questions during the presentation. Those questions will be addressed during the Q&A session. Once again, thank you very much for taking our time to join the presentation. We can start now. Mobolaji, please move on to the introductory slide for members of the fund. So just to do a quick introduction of the fund managers, right? The Chief Investment Officer, Mr. Uchenna Ukparo, has extensive experience. He has over 18 years of experience in the infrastructure fund space. Prior to joining United Capital, he worked with Infrastructure Bank PLC that handled a couple of concessions with a couple of public concessions with federal government and also some other private infrastructure deals. Prior to his time with Infrastructure Bank PLC, he worked with Honeywell Group. For Mobolaji Simoni, Mobolaji has over 11 years of experience. He's an investment professional that is focused on infrastructure finance. Prior to him joining United Capital PLC, he worked with First Bank, Fidelity Bank, and GT Bank. So now we can start the presentation. I'll hand over to Mr. Uchenna Ukparo. Thank you.
Thank you very much, Chikodi, and good afternoon. Thank you everyone for joining. We're happy that you're able to make out time from your busy days. On the screen is an agenda for the session today. We'll run through really quickly. Like Chikodi had noted, there will be an opportunity to ask questions, so we encourage participants to note the questions in the Q&A section on the screen. To set a bit of context, we thought it was useful just to recap a lot of information that you already know. We understand that Nigerians continue to lack electricity. How the graph on the top left corner is relevant is that it just shows you how poorly we perform in comparison to the rest of the world, the EU, perhaps only the general sub-Saharan region do we outperform. Immediately beneath that, another key pillar for economic growth is internet penetration, recognizing that the digital economy is essentially powering growth across the world today. So we look at internet penetration, and similar to the low level of performance that we have in electricity, it's a very, very identical outcome. We're seeing that Nigeria is performing very, very low, even though, mobile phone proliferation has grown significantly since 2001, but we find that internet penetration, which is primarily being driven by mobile devices, is still at an all-time low. So if you think about these two pillars, we're low in performance on electricity, low in performance on internet, what are the things that could potentially help us turn the tide, change this narrative, change this conversation? And the short answer is finance, that the ability to have the finance required to build the power plants, to build the transmission lines, to build the distribution lines, to build our towers, to build our data centers, to drive these two pillars, these two key pillars of growth but where is the finance going to come from? First question was perhaps budget, FGN budget. And on the screen here, what we see is a graph that has tracked FGN budget implementation over the last 8 years. On average, FGN budget implementation for capital expenditure is hovering at about 70%. Now, we recall that we always say that the government is budgeting far less than it should. And even in budgeting that relatively smaller sum, it's not able to do 100% of what it budgets. It's clear that the FGN budget is not the way to go, or it's not the sole way to go. The other option, which is in the middle row, the graph beneath it, we then look at what are the other sources of funding. We know that in the country, the pension funds have grown consistently since 2004. Total of 15 trillion of assets are available, but about 0.3% of that is actively funding infrastructure, which shows that there is a gap. If we have this much assets and 0.3% is funding infrastructure, clearly a lot more can be done. And so we move to the extreme right, and the top graph speaks to an alternate funding source, where we are looking to say perhaps foreign direct investment might be another funding source for infrastructure. But looking at that, what we see is that over the last 8-year period, foreign direct investment has continued to decline. And so if foreign investment isn't coming in, if pension funds isn't coming in, if government funding is insufficient, it's unsurprising that if you look at the bottom graph on the bottom right-hand corner, where you compare Nigeria with other African peers across an infrastructure index, Nigeria is doing poorly. Next slide, please. But it's not all bad news. It's really not all bad news. We've seen that, post-lockdown, the Nigerian economy started to show some signs of recovery, and we're expecting that recovery should translate to a resilient growth. Projections for 2022 and 2023 recognize that growth should be sustained, albeit at low levels, somewhere around 3.3 to 3.9%, but that is still healthy growth. We've also seen that even though there are concerns about a global recession, growth in Nigeria will be driven primarily by the non-oil sector. What that suggests is that, there will be opportunities that will continue to be mined regardless of, the global impact of the recession. We've also seen where energy prices globally have been rising. So the cost of PMS, the cost of diesel, the cost of gas has gone up exponentially. A key consequence of that was the war in Eastern Europe. But every time there's a challenge, there could also be an opportunity. So if you're a major gas producer like Nigeria, it just means that your gas is now in higher demand. It just means that you can challenge a higher price. If you're a company that is looking to do renewable energy, it means that the price of your solar systems is now much more affordable than diesel is, because diesel prices have gone through the roof. And so we see that where there's a challenge, we always see that there are opportunities. Amongst other things, we've seen 5G rollout. We think 5G rollout is very important. It's very important given the massive youth population. About 70% of Nigerians are under the age of 30. These are the people that will power growth for our economy, and they will do that through digital economy. So that's an upside. Another key update we have seen in the space is the launch of the Sovereign Infrastructure Vehicle, InfraCo, which has been set up by a combination of the government working with a number of quasi-private sector finance institutions to be able to do large ticket transactions. Government in this instance has put its money where its mouth is, working with the CBN, AFC, and NSIA to provide seed capital of 1 trillion naira to that vehicle. And several other national projects, the National Rail Network, the Lekki Deep Sea Port, the Fort Mainland Bridge, all of this we see as drivers for a potential turnaround for this Nigerian economy. And so we think that there are indeed silver lining on top opportunities, and we'll be happy to speak to you about that today. So the question is, if we see this massive opportunity in infrastructure, we feel that there's a shortage of funding, how can investors participate? And this question was what led to our establishment of the United Capital Infrastructure Fund. It's a local currency closed-ended debt fund registered with the Securities and Exchange Commission with a 150 billion naira program size. We set up the fund primarily to provide long-term capital to infrastructure and infrastructure-related projects, recognizing that those projects need the long-term patient capital for the infrastructure assets to be viable. We closed our Series 1 last year in February. We had fully invested. That investment is doing quite well. It's on the back of that success that we're presenting the Series 2, and we have opened our offer for the Series 2. A bit more about our Series 2, it's a 10 billion naira offer that we're looking to raise. The period of investment is 7 years. The return is 3 to 5% above the FGM bond. In terms of the yield of our Series 1, our Series 1 yielded a net return of 19.4%. And we have since made distributions to investors in consideration of their investment in Series 1. What does the fund invest in? This fund is quite sector agnostic, so we look across different sectors. We look at transportation, look at power, renewable energy, utilities, telecom, social infrastructure, and agribusiness, where we think and where we see that there's a viable opportunity that is technically feasible, commercially viable, meets our ESG considerations, then we're happy to take a closer look at those projects. What do we bring to the table? We bring long-term capital to allow those projects achieve a requisite return to investors. On the right-hand side of the screen, I'll just quickly run through our track record, even though I've touched on it. So we closed our Series 1 in February of last year. We proceeded to conclude our extensive due diligence on the investment opportunities. We closed our maiden investment in September last year, and returns from our pool of investment is now shown on the screen. We've been able to make distributions. Our distributions were made over 2 cycles, so we've made 2 distributions to date, and we're poised to continue to do that in the long term. In terms of our net asset value, we've seen the net asset value of the fund appreciate by an additional 56,000 naira per unit, and that is reflective of the value that the fund is mining. In terms of the team, I lead the team at United Capital, but work with a number of very, very capable, very, very strong team members. Sunday Asabo, he heads our portfolio and structured finance role. Sunday has very extensive experience in project finance and advisory, working in transactions across oil and gas, power, and other infrastructure-based sectors. Joel Godalo, he leads our portfolio and investing decision process. Joel comes with us with over 10 years of experience, a senior investment professional that has done this work through his time leading debt finance solutions, as well as advisory transactions. Mobolaji Sumoni, who is also speaking on the call today, is a structured finance manager, comes with us with almost exclusively power and infrastructure experience, which he had done across 3 different institutions, all of them commercial banks. And David Ikpo, a senior investment professional on the team, who brings his experience on advisory as well as participation on large ticket oil and gas and power deals. On the right-hand side of the screen, members of our advisory board, several of whom we think are very notable names, are shown there. And the advisory board oversees governance. In terms of the day-to-day investment decision-making, that is handled at investment committee level. Members of the investment committee are shown on the screen. And then on the bottom of the screen, we have Africa Finance Corporation. Africa Finance Corporation is an independent advisor to the fund, and their role is essentially to perform an independent appraisal of every single investment opportunity and prepare a parallel report that we share with our investment committee so that they have a rounded picture in arriving at any investment decision. Next slide, please. And so our Series 1, we thought it was a good idea just to highlight some of the experiences that we gleaned from our Series 1 investment. That investment was made in a lead recycling plant that has a capacity of 7,000 metric tons, but that is looking to expand that to 28,000 metric tons. What we did on that transaction was to provide them a 7-year medium-term debt facility to essentially refinance and provide working capital needs. Key features of the transaction that made that investment a compelling one was that we had guaranteed offtake for all the lead that was produced from that plant. That offtaker is an international off-taking company. The prices of lead are determined by the London Metal Exchange, so it's not tied to any inefficiencies or vagrancies of the local market. And we've seen that commodity prices are continuing to rise as the world goes through a global recovery. And the last thing was that there was a premium that the company was entitled to earn for achieving key quality requirements. In addition to these very attractive transaction features, we subjected this project to our due diligence. Due diligence was done across 3 pillars. On the one side, technical due diligence was done along with environmental and social due diligence, which was handled by iLife Consulting. Legal due diligence was carried out by Olaniwu Ajayi, and AFC carried out the transaction due diligence. So all of this tied up very nicely before we presented to our investment committee at first for the provisional approval and for the final approval. That investment, amongst others, are doing very well, which is why on the right-hand side of the screen, you can see that United Capital Infrastructure Fund is outperforming similar instruments in the market by a significant margin. At a net return of 19.3%, we think that that's really attractive. And so if you look at the bottom bit of your screen there, you will just see that, our net return is 19.4%. We've seen an appreciation in net asset value per unit. Total amount paid in dividends is 148 million. And you can see that the dividends per unit is also quite attractive. Next slide, please. So it's on this basis, at this point, you might be wondering, how do I get involved? How do I participate if I'm interested in taking a bit of an investment in United Capital Infrastructure Fund? Just a few things that to note. United Capital PLC is the sponsor of the fund, whilst United Capital Asset Management is the fund manager. Both sponsor and fund manager are very, very highly rated. A- Agusto and A+ Data Pro respectively. In terms of the program size, it's 150 billion naira program size, but on offer today is 10 billion naira that we're seeking to raise. Our offer opened on the 7th of March and is closing on the 17th of April. I'll just say that again, 17th of April, that's Monday of next week. In terms of the use of proceeds, we're using this proceeds for debt facilities and primarily long-term debt for projects that have gone through our rigorous appraisal process. The length of the investment or the tenure is 7 years. Our target return is 3 to 5%. Eligible investors are qualified institutional investors and high net worth individuals. The fund manager earns a management fee of 1.25% and the establishment costs are 1.44%. The minimum investment amount is 50 million naira. Right-hand side of the screen, key dates to note are the 7th of March as the opening, 17th of April as the closing, and then 2 weeks later, investors are expected to fund that commitment. And this bit, and what we're speaking to here is to give you a sense of, where I to invest in United Capital Infrastructure Fund, what am I essentially investing in? On the left-hand side of the screen are all the sectors we are actively appraising transactions on. So that's captive power, renewable energy, agribusiness, transportation and logistics, ICT and telecoms, gas. Just speaks to our investing process. So our deals cycle through multiple stages as we try to describe. They would go through a scanning appraisal, and then they will later be screened, and then a very detailed technical and commercial appraisal is done before the project then goes to our investment committee for provisional approval, following which we have third-party advisors, which I had shown on the previous slide, do the due diligence, and then we go back to our IC for final approval. And in all of this process, at every key gateway, we run these transactions by AFC, we take their feedback in trying to refine and ensure that the right transaction structures are put in place. And so it's on that basis that, what you see is that we started with a funnel of over 50 deals, and we have now drilled down to about 7 projects, which are shown on the right-hand side of the screen. Next slide, please.
Okay,
so at this point, I'm going to check. Thank you very much, Ikoni.
Yeah, thank you very much, Uche. That was very spot on. Like Uche rightly mentioned, there's significant gap in the infrastructure space in Nigeria, and that is one of the main objectives of us, that's United Capital, setting up the infrastructure funds, The intent is to pull funds from various investors and finance infrastructure projects that will be able to close the gap, right? One of the benefits of the infrastructure fund is that it offers diversification benefits. The fund is able to invest in the gas infrastructure, power, agribusiness infrastructure, transportation, supply chain, and renewable energy, just to mention a few of the sectors, right? The next section would be speaking to the key investment considerations, and that is answering the question, why United Capital Infrastructure Fund? This will be handled by Mr. Mobolaji Sumoni. So over to you, Mobolaji. Thank you. Before I hand over to Mobolaji, just to remind everyone that there is a Q&A tab where you're able to send in your questions. Rest assured that your questions will be answered during the Q&A session. Thank you. So over to you, Mobolaji.
Thank you, Chikodi. Good afternoon, everyone, and thank you for making our time to be at the webinar today. So the question of why UCIF, and the first point I'd like to state is to place an emphasis on the strong corporate governance of the fund. So our investment process entails a multi-layered process that allows the comprehensive due diligence that was mentioned earlier across legal, technical, and ESG due diligence. And then we leverage the extensive multidisciplinary skill set of members of our investment committee who have a cumulative experience of over 80 years. And then lastly, we leverage our appointed and retained financial advisor to the fund, independent financial advisor to the fund, the Africa Finance Corporation, who provide a broad overview of all the, the review and the appraisal process, the due diligence process, and then advise our investment committee on the project. And the rigor through which the corporate governance allows us to deploy into projects is a major key consideration. A second consideration is the fund allows regular income. So we schedule principal and interest repayments from our projects. And then on the back of that structuring, are able to provide semi-annual returns to investors in the funds. So certainly every semi-annually by June and by December, returns are made to investors on the funds. Because we have this at the back of our mind, our projects are structured to allow project sponsors make principal and interest repayments to match the timing when returns are to be made to our investors. A third point to note, which is very key, is investing in the fund allows you access to high quality and diversified portfolio. And what this essentially means is, on the back of the rigorous due diligence that we undertake for our projects and the fact that we are sector agnostic, meaning we're spread across sectors, renewable energy, gas projects, infrastructure projects, agribusiness, and on the back of the rigor that our assessment go through, the technical feasibility and commercial viability of the projects are tested. Transactions are structured and securitized to ensure that your investments are spread across a diversified portfolio that guarantee your returns as promised. A key point to note, another key point to note is that we provide highly competitive returns. And this is because we're a debt fund. So we invest debt in projects and then we price competitively and provide a long-term debt financing, which is attractive to project sponsors. So on the back of the rigor of our due diligence process, again, we already ascertained the capacity of the project to be viable, to be commercially viable. And as a result, we are priced appropriately and competitively, and they're therefore able to provide competitive returns to you, our investors. A key pivot or a key pillar of the fund is in principal preservation. And what we attempt to do is, whatever investment that you place in us, your capital is guaranteed to be returned to you. So the transaction structuring, which is the key focal point of the fund, and the securitization, which is another key focal point of the fund, ensures that the underlying projects we invest in guarantee your capital is returned onto you safely and asset when due. And so principal preservation is one of the major pivots or pillars of the infrastructure fund. And lastly, a key consideration at the infrastructure fund is we invest in projects that have shorter timelines to delivery. And what this means is, rather than invest in projects with a longer timeline to delivery, we go for projects that have a 6-month to 9-month timeline to delivery to mitigate the potential risk of time overrun, which is typical with with projects with longer timelines to delivery. And then secondly, projects are able to begin to generate returns. Projects are able to commence operations within a short timeline, 6 months to 9 months, and are able to begin to generate returns on the back of which we're able to return a yield to our investors. So all of this put together are the reasons why we think investing in UCIF is a great thing to do. And that's why we hope that you'd invest in our Series 2 offering, which is currently open and closes on the 17th of April, as has been mentioned. Thank you for listening, and over to you, Chikodi. Thank you.
Thank you very much, Mobolaji. Yes, just to spotlight what Mobolaji had mentioned, the Series 2 offering is going to close on Monday, 17th of April. Investors would send in their commitment forms. We'll discuss the call to action after the presentation, right? Once you send your commitment form, funding would happen 2 weeks after the closure. That's 2 weeks after the 17th of April. So there's enough time for you to plan your resources to invest. In terms of why United Capital Infrastructure Fund, for one, investors will ask questions around, oh, is my principal safe? Is my initial investment safe? Yes, your initial investment is safe. Your principal is essentially preserved, so you don't need to worry about depreciation of your principal. In terms of the structure, there's a strong corporate governance structure in place. You have the investment committee, you have the advisory board, you have an independent advisor, which is the AFC. We also have a legal advisor, Olaniwa Ajayi, that handles the legal due diligence. In terms of the fund managers, they have over 60 years of experience, extensive experience in the infrastructure space. So you're in good hands, essentially. So now we'll be moving on to the Q&A section of the presentation. I'll also remind everyone that there's a Q&A tab just right below your screen. You are able to ask questions. Where you've not sent in your questions, please do send in your questions while the session is being moderated by Feintola and Abimbola. Over to you, Feintola. Thank you.
Thank you, Chikodi, and thank you everyone for attending the webinar today. We do not take your time invested in this webinar for granted. It's interesting to know that we already have a few questions. Myself and Abimbola will be taking them. Uchenna, I think this question goes for you. Someone is asking, how easy is it to sell my investment in this fund? And another one is, what is the volume of secondary market sales of fund units that have occurred in the past 1 year? How easy is it to sell my investment in this fund? Which is the first question.
Thank you very much, Feintola, and thanks to attendees for asking questions. I think that the question here just essentially speaks to liquidity. And any investor that wants to get involved would like to know what are the pathways for me to exit. So I would speak to that in a broader sense. The first pathway is the fund manager will have the fund listed on an exchange, which makes it tradable, which kind of links to the second question. But aside from it being tradable, one of the things we have done is that we recognize that some investors may say, well, aside from it being traded, what else can we offer? And so we've also offered an exit pathway where on the second anniversary of your investment, the fund manager may then open it up to say any investor that wants to exit should please indicate, and the fund manager takes that investor. So we take on that obligation to reallocate from that investor to another investor. And by doing that, we essentially ensure that investors get the kind of liquidity considerations that they would expect from an instrument of this nature.
Okay, thank you, Uchenna. Just to emphasize, there's a liquidity position in year 2 at the subject to the approval of the fund manager. I'll be taking a very straightforward question. What is the minimum investment?
So if you'd allow me to take that question. Thank you for the question. Thank you, Feintola, and thank you for the question. The minimum investment in the fund is 50 million and then multiples of 5 million thereafter. Thank you.
At this point, I'll be handing it over to my colleague, Abimbola. You're muted, Abimbola.
Abimbola, you're muted.
Good afternoon, everyone. Thank you very much, Bensala. Good afternoon, everyone. Thanks for joining this session. I have a couple of questions. One is directly addressed to Uchenna. I believe some have been answered. One, the person who is anonymous asked that you should clarify the security of the fund. The person also wants you to clarify that one, that the minimum investment is quite high for low investors. Are there considerations for low investors in the category of 5 to 10 million? I believe the person means that is there any arrangement by United Capital Asset Management to pull investors together that cannot afford 50 million? And the third question by the same person is what happens to investors when the invested projects do not go as planned? Do you want to take these questions, or should I just, he has 5 questions all in one?
I think we take the first 3 just so that participants can follow the responses, and then we can take the others. The first question was about the security of the fund. The beauty about UCIF is that it's a debt fund. And with debt, we will typically preclude any debt facility on a security structure. For United Capital Infrastructure Fund, we have 3 layers security structure. One is we prioritize cash and near cash collateral. The second is we prioritize third-party security instruments, i.e. BGs. And lastly, we then rely on transaction documents and transaction protections, such as offtake guarantees. And so we do this on every single transaction just to be certain that the security package for that transaction is right before we make a commitment to invest. The second question was around the minimum investment. And we do recognize that for individual investors, it might appear a little high at 50 million naira. But we are, like I had said at the beginning, we are regulated by the SEC. SEC mandates that the class of investors that participate are consistent with the HNI description. That is what SEC prescribes. We are, however, open to having a conversation with pools of investors to find out if there are a significant number of investors that are interested and that would like to pull together. And so for this question, Anonymous, please kindly feel free to drop contact details. We can reach out and see what can be worked out if you are keen to proceed with this investment opportunity. Your third question was, what happens to investors' funds when the invested projects do not go as planned? We do not see that happening at all because of the way our transactions are structured. Chikodi and Mobolaji, speaking to you, they spoke about principal preservation, which means that before we take any commitment, before we step out of the door, so to speak, we have essentially ring-fenced and protected the transaction. Where there is a construction timeline, that timeline is very short, like Mobolaji has spoken to, but we do have protections against any time and cost overruns. Where it's operational, we do have protections against, and like I said earlier on, some of those protections include cash or near cash assets that we hold. So we do not see that as a challenge that will happen. Bimbo, please go ahead. I did hear you say there are several other questions.
Bimbo, you're muted if you're speaking.
Bimbo, you're still muted again.
Apologies, I unmuted myself. Okay, the fourth question from the same person is, are there rooms for early pull-out of invested fund should we have any emergency to take care of? And finally, from the same person, how often does this opportunity come up compared to FGN bonds?
Okay, so we had spoken to liquidity and exit. In fact, it was the very first response that provided, but to just do a quick recap, right? That the pathways to exit are one, through trading of these instruments, similar to how you would trade your equities on an exchange. That is one pathway. And the second pathway is the second anniversary of the fund, where the fund manager holds discretion open to investors that are seeking to exit. So we think that with those two pathways, that's a significant attempt to create liquidity. But let us bear in mind that, with the infrastructure fund and products of this nature, we both want an investment that is delivering a competitive return, but there's also a social component. Our capital should unlock, growth and economic development for the nature. And so that altruistic purpose means that we should always have that in the back of our mind. And then in terms of how often this opportunity comes up, this is our Series 2 that is opening in the market now. We expect that our Series 3 will be open in the market later on in the year, and we will generally keep our investor pool updated on developments around that, so there will be no surprises.
Thank you, Uchenna. That has been very enlightening. We have a question here. It says, what is the role of AFC? Are they invested in the fund? Mobolaji, are you able to respond to this question?
Thank you, Feintola, and thank you for the question. I am able to, yes. The Africa Finance Corporation serves as our independent financial advisor. And this is because, AFC has decades of experience, relevant infrastructure experience, having been financial advisors on long-term, high capex, high value infrastructure projects in Nigeria and across Africa. So AFC is retained with the fund or by the fund as our independent financial advisor, and they provide a final layout, review, and appraisal to an investment committee before an investment decision is made. Thank you.
Thank you, Mobolaji. I have an interesting question from Reynald Ibe, and Uchenna, it would be great if you can take this question. It says, infrastructure projects normally have a long time to delivery, typically beyond 6 months. But your strategy is to focus on short time to delivery projects. Is that visible? What type of projects have short time to delivery? And at what project stage will the capital be invested? I think we need to spend like a minute in explaining this. Thank you, Uche.
Thank you, Feintola. And Reynald, very, very insightful of you. You would find that, across the infrastructure space, there are different classes of assets. Public infrastructure assets, such as rail, roads, ports, are typically large ticket and typically have a long time to construction, a long time to raise financing. And you would find there's a lot of effort at EFI level, at multilateral level, trying to support government of Nigeria and other governments across sub-Saharan Africa to unlock those projects. We have seen projects of 200, 300, 400 megawatt power plants that are under development for 5, 6, 7 years. But amongst that, if you look closer, you would also see that there are a class of assets that are trying to accomplish very similar things on a much smaller scale. So where a power plant is looking to do 100 megawatts or 200 megawatts, there are 4, 5, 6 captive power plants that are looking to do 5 megawatts, 3 megawatts projects each. These assets, from start to finish, from once you draw down funding to when the asset is commissioned, can be delivered in 9 months. The only reason why I even say 9 months is because we have had global supply chain disruptions, such that importation of key equipment would typically take longer than it used to take. So that's one example. Another example is mini-grid systems. We find that a mini-grid system, a 1 megawatt mini-grid system, can be deployed in 6 months, starts to finish. We've seen other types of assets, and very, very interesting. In the healthcare space, very few projects have been able to scale up significantly. Why is that? Recognizing the size of our population. If you have the right partners, if you have the right companies, they can deliver these assets in 9 months, in 12 months. And so we've looked at that middle area that is not receiving as much government attention, but still needs funding, and says this is the area where we are going to intervene. These are the assets we're going to finance, and these are the ones, and we're financing them because they check the right boxes. They're not getting as much support, they're not getting as much attention. They can be de-risked, very, very thoroughly de-risked, and be financed in a closed loop. And very importantly, they are being delivered by capable and knowledgeable private sector partners. And so that's why we are playing in that space. Thank you very much.
Okay, so over to Abimbola to ask questions.
Okay, thank you very much, Benton. As a follow-on, Opeyemi Ayodeji is asking, how do I qualify as a high net worth individual? That's a follow-on to Uchena's answer about HNIs being one of those that can invest in this instrument.
So I'll take that. Thank you very much, Abimbola. So the SEC has defined description of what a HNI is. At the point of signing off on a commitment form, all you need to do with HNI is to click on a checkbox that says that you comply with that description, and that description is typically linked to your net worth. Once you click on that, you have qualified for that investment opportunity.
Thank you very much. The next question is also from Opeyemi Ayodeji. Is my investment going directly to an infrastructure project? And if yes, how will I know what I invested in?
Thanks a lot, Opeyemi, for that question. So all the investments are pulled in together into one fund. Now, as the fund manager, our role really is to screen, appraise, conduct due diligence on the projects on behalf of all the investors, and then present those for investment decisions by the investment committee. At the point where the investment committee approves those, then your fund, which is part of the contribution of pool of funds, is then deployed into different projects. In terms of how you know where your fund is, our obligation is to report to you on all the investments, which we do every quarter. So you will know that, okay, in this quarter, these were the assets that were financed, and this is how that asset is doing. And through that, investors are kept abreast of the developments of their capital.
Okay, thank you, Uchenna. This question is for Mobolaji. Will the periodic distribution from the fund be subjected to withholding tax deductions?
Thank you for this question. Uchenna, do you want to take it?
Delightedly. So because of the way the fund is structured, the tax authorities recognize that if we were to deduct withholding tax before making dividends, and then investors, particularly individual investors, were also to pay personal income tax, it will represent a double taxation. So no, withholding tax is not deducted at the point of distribution of dividends. It's when individual investors are making their personal income tax returns that those tax returns are to be made.
Thank you very much, Uchenna. The last question from here is, will performance reports be shared with investors? Will there be periodic distributions to investors in the fund? I think you have answered that. And will the fund invest in government projects, or will it be restricted to projects in the private sector spaces?
Okay, thank you for the question, Abimbola. So I think the first question was answered. That was answered. On the second question of investing in government assets, were typically designed to be more private sector inclined. So we're more, like Uchenna had mentioned previously, we're more inclined in the mid-tier type infrastructure projects, which are private sector driven. So, and that's our focus. Thank you.
Okay, thank you, Mobolaji. There's a question that we have here, and it goes, is there a penalty charge for investors that seeks to exit before 7 years?
I'm happy to take that question. And so there is no penal charge at the time an investor wants to exit. The fund is typically listed on an exchange, so he's able to sell down at the price that it's captured on that exchange.
Great.
We expect that he would have seen some appreciation, so he may even exit at a premium.
Okay. I know we already spoke about the exit strategy, although there's a question that speaks to a clear plan for selling and exiting. Essentially, it's where it's listed and they can sell and exit on the platform exchange. Echena, do you want to just provide a little bit more context on that? It says, what is the exit strategy for the investment? And then is there a clear plan for selling and exiting the investment?
Okay. Again, this question speaks to exit, which we've taken over and over. The plan really is to have it listed. But investors should bear in mind that, the term of investment is 7 years. So in 7 years, you would have fully recovered both principal and interest repayment and fully exited that cycle. And so having it listed, having your repayments made biannually, both of these represent pathways to exiting the investment.
Okay. And where it is listed, they are able to sell their position at some point if they are unable to wait till 7 years on the exchange. Great. There's a question here. It says, how does inflationary pressure or other macroeconomic factors affect the required return?
As with every opportunity, and Mobolaji, if you don't mind, I'll take that one. As with every opportunity, inflation is a big consideration. We saw a combination of several factors, inflation and hawkish government policies, jack up interest rates last year. Interest rates were trending at a very, very high in the last quarter of last year, which might be bad for many parts of the economy, but is great for investors that are investing in an interest rate linked instrument. So you can see that for our Series 1, our investors were able to earn a 19.4% return, just reflective of the relatively high interest rate environment.
Okay, one other question. Can you hear me? Can you hear me now?
Yes, we can.
Yes, we can.
Okay. The question says, is there an opportunity to protect the investment against Naira depreciation against the US dollars?
So in general, and I'll take that question as well. In general, in our portfolio selection, this is one of the considerations. And we do this on a transaction by transaction basis. So for instance, the transaction we presented over the course of this session was one where we were investing in Naira, but the returns was coming in dollars. And so every time you have, and that was because the produce from that asset is export generated. So every time you have that export linkage, then there's a foreign currency income that essentially hedges your returns against them. And so a number of our transactions that we're looking at also maintain this export-based link, but that does not cover all of the transactions. So like I said, it does have to happen on a transaction by transaction basis.
Thank you, Uche. Do we still have time for Q&A? As we still have like 2 more questions.
Yes, Fentola, I think we can take two more questions before we bring the session to a close.
Okay, thank you very much. There's a question here that says, what are the risks associated with the project and how are they being mitigated?
Okay, Uchenna, Fentola, thank you for the question. I was going to say, Uchenna, allow me to take this one. I mean, as typical with infrastructure type projects, there are risks involved. A couple of them including construction risk, which I think is the critical risk, and then sponsor risk, which speaks to the pedigree of the sponsor, their track record, what they've done before. And that's why it was said as part of our investment process, you know, we are careful to identify the risk associated with the project. And that's why we also do a mix of brownfield and greenfield projects. So brownfield projects are effectively de-risked because they began to generate cash flows. The construction risk or the construction phase is over. And then we are happy to just refinance that transaction and provide the sponsor with longer term financing that matches our investment profile. So yes, we identify the risks like construction, which is critical. We clearly mitigate them. We allocate the risk to the necessary party. And that's why, as Uchenna had said earlier, one of our transaction securities is bank guarantees. We call them inward bank guarantees from the EPC contractors or project counterparties, so that in the case where there's a default, there's a guarantee to call on that protects the principal. So we identify all the risks involved in the process in any of our projects, and we carefully allocate the risk and mitigate them. Thank you.
Thank you, Mobolaji. And one last question. How often does the benchmark rate reset? The benchmark.
I'm happy to take that question.
Okay.
So benchmark rate for the infrastructure fund resets every 90 days, that's every 3 months. And the reason why that is done is just to ensure that whatever returns you are comparing to, and it speaks to one of the questions that the participant asked earlier on, whatever returns we're comparing to, we need to be able to demonstrate that we're comparing to very real market returns, and a quarter is sufficient time to reflect any changes in the market.
Thank you, Uchenna, and thank you everyone for participating in the question and answer section. I'll be handing over back to Chikodi.
Okay. Thank you very much, Fentola, Abimbola, Uche, and Mobolaji. I think we've been able to answer a considerable number of questions. However, questions that we missed during the session, we would answer that after the presentation. There will be email correspondences that would go out. One would be the call to action. Essentially, it will be a link that you can click on. When you click on it, you have the commitment form. You have access to the commitment form and the HNI declaration form. Once you fill the form, we automatically get it on our end, and then you're able to participate in the investment opportunity. Just to recap some of the key highlights, the minimum investment amount is 50 million in multiples of 5 million thereafter. The infrastructure fund is well diversified in different sectors. You have the healthcare, you have agribusiness, you have power, you have renewable energy, you have recycling. So there's a diversification benefits. In terms of return, the return is very, very competitive. The Series 3 is offering 3 to 5% above what equivalent FGN bond would be offering. For FGN, 7-year FGN is currently doing at around 12.68%. When you add that, you see that it's very, very competitive. In terms of our track record, Series 1 provided a net return of 19.4% to investors last year. So you can see that this is a viable investment outlet. I think this is an opportunity that no one should miss out on. So now I'll hand over to Uche Umparo to give us the closing remark. Thank you.
Chikodi, you've made my job very, very easy. I just want to say thank you to all our participants for joining. Not only did you listen in, you engage with us, and we appreciate that. We recognize that the infrastructure space is still relatively new, relatively young. And so what we have tried to do is to demonstrate that there is a way where you can invest in a disciplined and safe manner and generate a decent return for your investors that is far above what the market is doing. We recognize that infrastructure has both a capitalist as well as an intrinsic objective when you are investing in that space. And so we're very happy that we're able to meet both of those objectives for our investors. Like Chikodi has said, please feel free to participate via filling out the commitment forms, which you will get in your emails after the session. And when you have any questions, any inquiries, please do not hesitate to contact us. You can reach us and we'll be happy to provide any clarifications. Thank you very much for your time. And that's it for us. Bye-bye for now.
Thank you. Thank you. So there will be a call to action after this. You would get emails from our communication team. So thank you guys very much for joining the call. Do enjoy the rest of the week.
Thank you and good afternoon.
Thank you and bye-bye for now.